Imagine a president so powerful that a single tweet could send stocks crashing, global markets spiraling, or an entire industry booming overnight. That president is Donald Trump. But here's the real question. Has Trump been good or bad for business? Or is his impact something even uglier? From tax cuts that made billionaires richer, to trade wars that shook the global economy, to a potential 60% tariff on China, Trump's economic policies have reshaped the financial world. Now, as he aims for another term, his policies could take an even sharper turn, creating massive winners and losers in the business world. This is the good, the bad, and the ugly of Trump's impact on business, the stock market, and China. Chapter 1. The good rewind to 2017. Trump takes office, and almost immediately, the stock market begins a historic rally. One of his biggest moves? The Tax Cuts and Jobs Act, which slashed corporate taxes from 35% to 21%. This single policy injected billions into the economy, fueling unprecedented growth and pushing the Dow, the S&P 500, and the Nasdaq to record highs. For businesses, this was a golden era. More money meant higher profits, bigger stock buybacks, and a booming stock market. The extra cash allowed major corporations to expand, innovate, and hire more employees. Big companies like Apple, Microsoft, and Tesla saw their valuations skyrocket, while Wall Street experienced one of its most bullish runs in history. And it wasn't just the stock market. Trump deregulated industries, cutting government restrictions on energy, banking, and tech. The result? Oil and gas stocks soared, financial firms thrived, and manufacturers benefited from fewer regulations. Companies that had long been burdened by government oversight now had more freedom to operate as they saw fit, leading to increased investment and production. Even small businesses felt the impact. Less regulation meant it was easier and cheaper to start and grow a company. Entrepreneurs who had struggled with red tape suddenly found themselves in an environment where business-friendly policies encouraged innovation and expansion. On paper, Trump's economy looked unstoppable. But was it? Here's where things get complicated. In 2018, Trump launched a trade war with China, imposing tariffs on hundreds of billions of dollars worth of Chinese goods. The goal was to bring manufacturing back to the US and reduce America's reliance on foreign production. But the unintended consequences were massive. China retaliated. The result? Stock market volatility surged. Tech giants like Apple, Nvidia, and Tesla faced massive supply chain issues, and farmers lost billions as China cut US agricultural imports. The tariffs led to increased costs for businesses and consumers alike, making everything from electronics to basic household goods more expensive. Manufacturing did not return to the US as expected. Instead, many companies shifted their supply chains to other countries like Vietnam and India. Trump's America First strategy was meant to bring jobs back to the US, but it disrupted global trade instead. Many American businesses, particularly in retail and tech, suffered from increased costs while China pivoted to new trading partners, reducing its dependence on the US. And let's not forget the debt problem. Under Trump, the US national debt exploded, rising by nearly $7.8 trillion in just 4 years. The tax cuts helped corporations, but they also widened the wealth gap and left the government with a massive deficit. While businesses thrived, wage growth for the average worker remained sluggish, and the long-term impact of the growing debt remains uncertain. Chapter 3. The ugly. Now here's where things get ugly. China. If Trump wins in 2024, he's already planning a 60% tariff on Chinese imports. This would be a direct economic war, sending shockwaves through global markets. A tariff of this magnitude would make Chinese goods unaffordable for many American businesses and consumers, potentially triggering inflation and slowing down economic growth. The consequences? Higher consumer prices in the US, more supply chain chaos, and US companies reliant on China, like Apple, could take a massive hit. China has already hinted at severe countermeasures, including cutting off critical exports like rare earth minerals, which are essential for tech production. And the stock market? Brace for impact. At the same time, Trump's anti-regulation policies could lead to more financial instability, weaker protections for the workers and consumers, and more inflationary pressure from trade wars. A rollback of environmental and financial regulations could lead to short-term profits but long-term risks, especially in sectors that require stability and sustainability. Love him or hate him, Trump's return could mean huge financial gains for some but chaos for others. Chapter 4. The stock market impact. If Trump wins, what happens to the stock market? Here's the bullish case. Big oil wins, with ExxonMobil, Chevron, and fossil fuel stocks surging. Defense stocks explode, with companies like Lockheed Martin and Raytheon benefiting from Trump's military spending. Banks and financials rally as less regulation boosts JP Morgan, Goldman Sachs, and Bank of America. Industrial stocks, particularly those tied to infrastructure and construction, could see massive gains as Trump focuses on rebuilding American manufacturing. And the bearish case? Tech stocks suffer as Apple, Tesla, and Nvidia struggle with trade war consequences. Retail gets hit hard, with higher tariffs increasing costs for businesses like Walmart and Target. Volatility increases as investors hate uncertainty, and Trump's presidency brings plenty of it. Emerging markets could also experience a downturn as global supply chains get disrupted. The bottom line? Trump moves markets, sometimes in ways nobody expects. Chapter 5. The Global Ripple Effect. Trump's policies don't just impact America. They send shockwaves across the globe. China is already preparing for a trade war, boosting its partnerships with countries like Brazil, Russia, and India to reduce reliance on the U.S. This shift could create a new global economic order, where the U.S. plays a smaller role in international trade. Europe is caught in the middle. Trump has threatened to slap tariffs on EU goods, which could create more instability. The potential for economic fragmentation is real, and countries that have long depended on U.S. economic policies may need to rethink their strategies. Emerging markets could struggle. Countries that depend on U.S.-China trade, like Mexico and Vietnam, might see economic slowdowns. Supply chain disruptions and shifting alliances could create an unpredictable business environment worldwide. The global economy is entering a new phase, and Trump is at the center of it all. Chapter 6. The Future of Trump's Economic Legacy. So, what happens next? Will Trump's policies make businesses and stocks boom again? Or will his aggressive stance on China and deregulation trigger another financial crisis? One thing's for sure. If Trump returns, the economy is in for a wild ride. So, what do you think? Will Trump's impact on business be good, bad, or just plain ugly? Let me know in the comments. Don't forget to like, subscribe, and stay tuned for more deep dives into the biggest financial and political stories shaping the world. I'll catch you in the next one.